Bear with me on this. A few years ago, when I started my trading journey, this content that I'm giving you today would be invaluable to me. Why? Well, I'll give you three reasons. Number one, it's short and straight to the point, covering the core principle of trading if you are a beginner. Number two, it's free. Yes, it's free. This mini course that I'm giving you today, it's completely free, and that's always a bonus, right? And number three, I was a complete idiot. Trading, what's that? Let's just buy coins. So, if you're interested in crypto, if you're interested in trading, and just started out your journey in this year, after the beast roars, we'll dive into it. Before we start, I just want to notify you that below this video there's a special feature that I want you to try. You see that red box that says subscribe on it? Well, first of all, we don't want red in trading. That's absolutely bad and forbidden. Secondly, I will give you a secret. If you click that box, it changes colors. So no longer will you see red, it will become gray. Don't believe me? Do it. Just click on it and you'll see the magic happening. And now let's talk about this mighty concept that this mini course is gonna be all about. What's in your opinion the most important thing in trading? Purely from the technical side. Well, ladies and gentlemen, today we are talking about support and resistance. Yes, for some of you this is a boring stuff, and I totally dig you, because in my beginnings this stuff didn't concern me at all, and vice versa. My trading sucked big time. So before we dig into the technical side, let's talk about what is support and resistance. Well, support and resistance are levels, or let's say areas, where in a downtrend the price is expected to pause due to concentration of demand, so people are buying it at levels. Of course, on significant support the price is not only expected to pause but to reverse and go the other way. Also, resistance occurs when we are in an uptrend and expectation to pause is there. Why? Due to concentration of supply. So a lot of people selling. If we don't pause, if it's a big resistance, we will reverse our trend. How do we use support and resistance? We'll use it to identify price point on chart where the probability is higher for a pause or reversal, as we said. The most important part in support and resistance is a market psychology, as those are levels where traders and investors remember the past actions and react to changing conditions to anticipate future movements. So, today I will present you with the three cases of support and resistance, and those cases will be plenty much for you if you want to start trading on them. Our first type of support and resistance is the most significant one and the most basic one. It's a horizontal line of support or resistance. Now, I must state that we are on the total market cap daily chart. Remember, daily charts, in my opinion, are great for trading. Higher than that, maybe 3-day chart. But if we go to the weekly chart, we are talking about investing, because those actions, exits and entries could take months or even years. So for a basic trading, let's stick to the daily chart. And why not use the market cap of all the coins combined? Now I'll give you a perfect example of horizontal support. There you go. It's clearly in September of this year that we bounced from the support line. Not once, but twice. So regarding that, and regarding what we said about the support and resistance lines, when we move to this horizontal support, what can you expect from it? Well, of course, a bounce. Absolutely, we could break to the downside, but by the probability, you now know what to expect from this level. Okay, now let's find a level of resistance to show you. We'll use the June and July price action from this year, and as you can see, this horizontal line showed us some resistance. After the break, we continued on our uptrend. That's what's happening at that times. So now you know what is horizontal resistance and what is horizontal support, and how can you trade it, right? Well, okay, but a great question that now you're probably asking is, what if we break out of it, like we did here? It's pretty simple. Use your stop losses somewhere in this region, but that is topic for completely another video. Is this clear enough for you? If it is, let's go to the point number 2, and that is trend lines, or should we say angled levels of support and resistance. This is the price action from the March of this year, and this looks pretty great example for me. Let's draw a trend line. This is a perfect example of trend line that is making us support many times, and after the break of that support is showing us resistance, as well as horizontal lines. The trend lines are also excellent indicators of support and resistance. Now, how do you trade it? Well, pretty simple. You are in the trade as long as we are not breaking this line, right? This is your exit. Let's say you entered here on this point, because at that point you didn't even know that the trend line existed. You would exited here when the trend line is broken. If this trend line was going much more into the future, you would stay in the trade. So pretty simple. Buy on the support, sell on the resistance. This is one more example of the clear resistance trend line. You can see the value that we're getting from touching this trend line and the resistance that it's making in holding the price back. If you were to pull back our support from the example before this, now this is how you could be trading price between this support and resistance trend line. If you entered, let's say here or here, if you added to your position, you could be exiting here or here. This is a perfect example. Buying on the support, selling on the resistance. Okay, I hope that's somewhat interesting to you and that you are learning, because all this material you will be using in the future. But how about we talk on our third case of supporting the resistance lines, and that is dynamic support and resistance line. The ones we showed you in these two examples are static supports. They are not moving, but dynamic supports are moving. Why? Because they are moving averages. So averages of the price, but they are certainly not average to us. You know we love them. They are moving extraordinaires to us. On the screen, you are seeing a 100-day moving average. And what is this moving average doing? Well, making a support. Even here, although we didn't touch to the teeth, it made a support again. So all the rules apply. Those are not straight lines, but moving lines that are moving in the correlation with the price. The basic rules of support and resistance apply. Now, if this was our support, let's say, can this, a 50-day moving average, be our resistance? It certainly can, and it is. And look at this beautiful example of resistance in action. Here, the resistance is broken. That was last week, ladies and gentlemen, as we're making this video. So, let's make a conclusion. We have our dynamic support lines, moving averages. We have our trend lines, and we have our horizontal lines of support and resistance. Try them out, one at a time. Try trading on it. Those are so simple, yet so effective. One more time, I will conclude that simplicity is the king, and no fancy indicator will give you better results than this stuff I'm showing you right now. Did you learn anything? If you did, give me a thumbs up. No, literally, give me the thumbs up. Now, in your room when you're watching video, put a thumbs up. Thank you. If only there's a way I could see this. Well, who knows, someday maybe. Until then, watch these other videos that I'm showing you right now. Bye!